Hello, everyone. Good morning, good day. This is Nick Katko from BMA, and we're going to be talking about improving the budgeting process today. First, let's do the technical check. In the question pane, please let me know if you can see me, if you can see the screen, and you can hear me, if you can hear me. Just need a couple responses there. All right, you can hear me. Can you see me? All systems go. Thanks. That's what I wanted to hear. All right, let me maneuver back to the presentation. So for your purposes, if you're attending the webinar live, you can download the handout from the handout section of your control panel. If you're watching a recording of the webinar, please send me an email and I will be glad to send you a copy of the presentation. And if you have any questions, please put them in the question pane and we'll try to get to some questions at a minimum at the end, maybe even before that. I just want to make sure I lost my mouse. There we go. All right. So the other administrative task, if you are a certified public accountant and you would like to receive 1 hour of continuing education credit for this workshop, please answer at least 3 of the polling questions. There's actually going to be 5 today. Be logged into the event for at least 50 minutes, and you have to attend the live event. And if you want a certificate, please send me an email. I'll send it to you. And even if you're not a certified public accountant, if you'd like a certificate of attendance, I'll be glad to send one to you. So that takes care of all the administrative pieces. So let's start talking about budgeting. So these are the objectives, learning objectives for today, and also the basic agenda. We want to look at the problems with the annual budgeting process. We want to learn how to identify waste in budgeting, and there is a lot of it. Learn how to improve budgeting through the application of the PDCA process, which I will explain, and I'm also going to give you some ideas on improvement approaches that maybe you can try out this year. Then we'll talk about rolling forecasts. We'll wrap up, have some questions. I'll have a slide at the end, but I'm also going to be doing a virtual Improving Budgeting Kaizen event in October. You'll see the details at the end. All right, so we're going to start off a little bit differently here today. We're going to do some polling questions to understand the problems with budgeting. So let me, sorry, I got to find my mouse. I'm going to open up polling question. Oh, I have a problem. I did not load the polling questions, okay? So we'll have to skip that. And so what I'll do is make sure that sorry about that, technical glitch on my part. If you still want to receive certified continuing education, I'll still send the certificates and I'll make sure that my records show that you answered polling questions. And actually the first polling question was this, is, how long does your budgeting process take? And basically, if you can, maybe in the question pane, I'd like to just get some responses because the polling question was, it takes like more than 3 months. It takes 2 months or 1 month. And I'm just trying to get an idea how long it takes for you and your company to complete the budgeting process. So let's see. So some people can, okay. So we have Eric says 3 months. Bill Sims says 3 to 4 months. Anybody else? Oh, everybody, 3 months. Harish. David Aziz, 1.5 months. Jared Adkins, 3 to 4 months. So yeah, it's a long process, and you can see from this chart that a lot of companies even start way before that. Okay, and this chart came from my friend Jerry Solomon. So the process takes a long time. And here's the thing, you only do it once a year. Okay, and I think everyone gets so wrapped up in we got to get the budgeting done that you think about ways to maybe tweak it or make it a little bit better, but it does require some thought and sort of pre-planning, not just about the budgeting, but you have to really do some planning up front to improve it, because it's not like you can practice budgeting during the year, okay? And plus, you don't want to practice budgeting during the year. All right, so the second polling question is, on average, how many rounds of budgeting do you have? You do 1 round, 2 rounds, 3 rounds, or more than 3 rounds. So again, if some people can put some responses in. Harish said 3 rounds of budgeting. Anybody else? Oh, most people talking about 3 rounds of budgeting. Think about this. Every round of budgeting is after the first round of budgeting. In essence, that's a big rework loop. Okay. And there's lots of reasons that you have multiple rounds of budgeting. And, this is one improvement opportunity to reduce that. All right. So, what are the problems? Okay. And this probably isn't surprising to anybody. Hold on one second. It's time consuming. Okay. It has a lot of waste, and I'm going to go over the detailed waste in budgeting in a few minutes. Oftentimes it's out of date when it starts. Okay. People just don't believe the numbers, or they seem very unrealistic. There's also a level of inflexibility. I mean, this is the budget. We need to hit these numbers. Okay. And there's no changing the numbers once you do that. And, the problem with sort of the annual budget is you got these year-end numbers, and as the year progresses, if you're not hitting the numbers to the budget, it gets very difficult to get to the budget at the end of the year, because, for example, you can't increase sales this much if sales have been lagging behind budget, or if your costs are too high, you can't actually, physically cut those costs to make the budget. And it just, that's called, there's this, and it's an artificial barrier this year end. Gaming the process. Okay. If there's, people submit budgets that are sort of very, very high, knowing that they're going to get cut, but they still get more than they thought. Okay, so there's those elements, which really is not value added at all. It's that there's a lot of waste, and that creates these multiple rounds of budgeting. Then there's too much detail. Okay, the traditional budget of budgeting every expense line item in a department by month, that's a lot of detail. And the level of detail requires an assumption. Okay, that's the last circle going clockwise. And the more detail that's required, the more assumptions. And here's what I say about assumptions. I said, nobody is good enough to predict the future. But that's what budgeting is all about. You have to, you load in a bunch of assumptions of what's going to happen next year. And then you cross your fingers and hope that those assumptions hold. But the fact of the matter is, they don't. I mean, you can't predict business conditions. As I said in previous webinars or workshops, think back to the fourth quarter of 2019 when you were doing your budget for 2020. Could anyone have predicted the pandemic that would hit in 2020 and basically blow up just about every company's budget? Nobody could have predicted that. Okay. And that's just, you don't, I mean, I'm talking about, that's a once in a century pandemic, but there are other business conditions and situations that arise that nobody knows about. Okay. And one aspect that I don't have listed here, but really drives budgeting, is using actual to budget as a measure of performance. And I'm going to be very vocal about this throughout the webinar. I think using actual to budget as a level of performance is terrible. And if you get one thing out of this webinar, stop doing that. Okay, this is why, if I'm a manager and I know that I'm going to be judged on actual versus the budget, what I'm going to do is I'm going to try to get my budget as high as possible to factor in all these uncertainties about the assumptions, because I can't predict the future. So if I pad my budget, then, I'm hopefully actual is always going to be under budget and I look good. And it drives the wrong behavior in the company. Now, budgets serve a purpose, but at one level, you sort of have to redefine the purpose of the budget and carve out this actual to budget as one of the purposes. So here's the waste that is in the budgeting process. The quality of the information is poor. Okay, that's a defect. The input, because you can make a wrong assumption. The output, again, people don't believe the numbers. There's a lot of overproduction, which is detailed information that the users do not use. There's a lot of waiting time. So there's delay between the process steps. There's lengthy turnaround times. And when we talk about mapping the process, I think, one thing you'll see is that the level of, if it takes 3 months, there definitely is not 3 months of work in the budgeting process. My guess, without any education or without any evidence, my guess is that there's, a few weeks of possible work in the 3 months, but it might only be hours of work. The waste of neglect of human talent. Okay, a lot of this work is beneath the skill set of employees, especially in finance and accounting. They're crunching numbers on spreadsheets. Okay, and even managers are using spreadsheets to crunch these numbers. The people that are involved in the budgeting process are highly skilled people. You think about every manager who has budget responsibility, and they probably could be spending their time on other things besides budgeting. There's a lot of transportation waste, handoffs of information. from finance and accounting into the departments, maybe within the departments. You have sort of the handoffs of the information for approval purposes, and then you have lots and lots of meetings about the budget. The waste of inventory, annual budgeting is a batch process. And we have to look at it a little bit differently in order to make improvements. There's the multiple rounds of budgeting, okay? That's sort of like motion waste. And then there's excess processing. All of the unnecessary steps and all of the detail that does not create any value is waste. So you're ripe for improvement. So let's look at some of the root causes of this waste. Okay, so what causes defects? It's about the level of assumptions about the future. Okay, like I said, nobody's good at predicting. And so, you know, a detailed, an assumption that you make that, you know, in 6 or 7 months, the assumption's not valid anymore, that means the budget's not valid anymore. I think driving the actual to budget performance and using that creates a lot of overproduction waste because you want the details. So for example, if I'm running the accounting department and I have an accounting department budget and I'm being judged on actual to budget performance, you know, we need to see exactly which expense was over budget rather than just expenses in total. Waiting time. You know, this is sort of what's interesting. You know, you push the accounting and finance pushes the information to the managers and says, you know, get your work done, get the budget work done. And there's a deadline because every company has a schedule when, you know, you're supposed to return the information back to accounting and finance so they can compile or pass it along to the next function down the line. But, you know, these managers have other work to do. And so, you know, I might receive the budget packet from accounting today, and I know I have 3 weeks to prepare the budget. I'm going to be working on other things. It's a low priority for me. But I know what my deadline is. And so, you know, I'll just, you know, as we get closer to the deadline, then I'll work on it. Neglect of talent, you know, this is the way we've always done the budgeting process and not looking at trying to do it differently. Transportation waste, you know, traditional budgeting on an annual basis is a big push system. Accounting pushes the information and then they get it back. Okay, and so there's lots of handoffs and that and such. Now, if you can move to a pull system and a higher level of detail, you eliminate a lot of the handoffs. Again, annual budgeting, that's the way we've always done it. Rework, I think one of the things about these multiple rounds of budgeting is the fact that the people responsible for preparing their portion of the budget, they don't really know what the targets are. And there's all this negotiation that goes on. Extra processing, you know, the level of detail and all of the above waste contribute to excess processing. So there's a lot of waste. There's a lot of opportunity. And let's look at now, how can we improve budgeting? So first, I'm going to explain the plan, do, check, act methodology. And then I'll give you some examples of things you can try to do this year when you're budgeting for 2022. So the general approach that I think is good, and I've worked with some companies on this, is okay, we have annual budgeting right now. So first, let's try to improve annual budgeting. Let's reduce the processing time. Okay, let's try to, reduce the time in half, or maybe 75%. Any number, okay, so a certain reduction in the overall time, from 3 months to 2 months, from 3 months to 1.5 months. Just set that, okay? Because then you have to set a target so that you can think of, so that you and others can think of, how can we improve this? How can we get there? Longer term, the goal would be to replace annual budgeting with some form of a rolling forecast, like on a quarterly basis or a monthly basis. Now, some of you may do forecasting, but some of you may have an annual budget and then do forecasting. I think if your company does that, you should choose one or the other, because you're doubling your work. Okay, but to go from traditional annual budgeting that takes a long time and has a lot of waste directly into rolling forecast, I think is a big leap. I mean, I'm not saying it's impossible, but I think it's a big leap. It depends on the size of the company, the problems and issues you currently have in budgeting. But here's the thing, about rolling forecasts. It has to be faster than annual budgeting, and it cannot be as detailed. So it's not like you're doing annual budgeting 4 times a year. You got to find a way to do it faster. And we'll be talking about this later on in the webinar. So the PDCA process, this is the foundation for continuous improvement. Okay, if you've never been involved in any Kaizen event, the PDCA process is the process that is followed to make any type of sustained improvement. So let me review this in terms of how it would work for annual budgeting. So the most important phase is the plan phase. If you develop a good plan with specific components, then it's a matter of executing the plan and seeing the actual results compared to what you thought was going to happen. So first step, make the current process visible. Okay, I'm going to show you some simple ways to do it. Yes, this is about, doing a process map of the budgeting process, but it doesn't have to be as detailed as a value stream map in a manufacturing process. You need to measure, okay? And I'm going to give you some basic performance measurements for budgeting. You have to measure the current state. And you need to have these measures to set targets. Okay, so, if one simple measure, how long does budgeting take? It takes 3 months. How long do we want it to take? What's the target? Oh, we want it to be 1.5 months for budgeting for 2023. Okay, so you've set a target. And then from there, if you know what the current measures are, where you want to be, then you have to sort of look at your process map and say, where's the waste? How can we do work differently? And you develop a specific improvement plan to employ in your budgeting process. And this is, because you only do budgeting once a year, this whole planning has to be done. And if you haven't started budgeting yet, I would recommend get started on planning the improvements. And then when you start, and you have to figure out how those plans will be executed during the budgeting process. The do phase, okay, we're gonna run the budgeting process. We're gonna do it a little bit differently though. That's what's important. We're going to use daily lean management practices, and we're going to be using more of a pull system rather than a push system. And I'm going to explain this in more detail. You also want to develop standard responses to abnormal conditions. Okay, so if something goes awry in the budgeting process, there's a standard response. Okay, that's part of daily lean management. The check and adjust. Now, the traditional budgeting process is we have a deadline, and information has to be sent, for example, back to accounting and finance by the deadline. But there's a lot of work that goes on to develop that information that accounting is going to receive. So what you want to do is you don't want to just let the process sit. You want to actively measure and manage the process using huddles and measures. So for example, have a weekly huddle on the budget. Look at the measures, look at the progress of the work. And in some cases, you might be able to use daily check and adjust, especially like if you're inside a department or a function that is producing one of the components of the budget. For example, let's take, sales, developing a sales forecast. Okay, there's a whole lot of work. There might be a whole lot of work that they have to do. So maybe that's where they could employ a visual board and measures and manage progress on a daily basis to get it done on time. And I'm going to go over these in detail. Then obviously after you've completed the budgeting process with the improvements, you evaluate the results against your plan. But think PDCA, think active management of the budgeting process. Because what you're trying to do is you're trying to speed up the process. You're trying to eliminate some waste. So mapping the process. So here's two simple methods that you can use. One is a SIPOC chart. SIPOC, if you're not familiar with it, stands for supplier, input, process, output, customer. And there's variations of this. A SIPOC diagram is pretty easy to put together. And if you look at the colored row there and the numbers, you'll see that you actually start in the middle. So what are the major steps in your budgeting process? List those out, all of the steps first. What are the outputs of the process? And who uses that output? Because again, you may have certain outputs that are used by different functions. For example, in a manufacturing company, a sales forecast is going to be used by accounting and finance, but it also will be used by operations. Might also be used for something like product development. Who knows? Depends on the level of detail. So you do the process step, the output, and who the customer is. And by the way, the customer can be the next process step. And then you look at, okay, so what are the inputs that are required and who supplies those inputs? This doesn't take long to do. If you get the right people in the room, you can develop a pretty simple chart, SIPOC chart for the budgeting process. Another example is to just use Post-it notes and draw more of a traditional sequential process map. Okay, this is something I did with a company. It's not the budgeting process, but it's a procured to pay process. So you just, again, what's the first step in the process? What's the second step? What's the third step? You want to get the sequence together. And then you want to sort of brainstorm real fast, what's the waste? Okay. And, what's interesting about identifying the waste is you let the people do it silently. And what I mean by that is you pass out a bunch of Post-it notes and some pens, and you say, okay, what are the problems and issues in the steps in the process? and they just put them up like this. So this is two simple ways to make the process visible. You're trying to, there's a reason for this. And the reason is you want to achieve consensus. This is how these are the steps and the activities. This is the proper sequence. And by the way, you can brainstorm some of the waste. These activities don't take a long time. Okay, it's not, and so, I'm just really, I really encourage you to make the process visible so everybody understands how it works. So visibility of the process. Next step is you got to measure the process. So what should you be measuring? Well, you want to measure quality. How many rework loops do you have today? You can also do some sort of user satisfaction or customer satisfaction index. Look at all the budgeting information that is produced. Ask the users, what percentage of this information do you use? You'll probably be surprised at how little is actually being used. Measure on-time delivery. Okay, there's due dates. That's just like in manufacturing, you have a due date to ship an order. Okay, so measure on-time delivery of all of the components of the budget process, and you really want to break this down. Okay, so for example, I'm going to use a sales forecast. So the sales forecast has a due date, but there are many pieces to the sales forecast which have to be completed before the whole forecast is done. So again, what's the on-time delivery of the components of the budgeting process, and measure it. Cost. How many total hours do you spend on the budgeting process? Not total time from, not the 3 months, but how many hours are spent working on it? Now, obviously, the best way to do this would be to do some observations and data collection, but you can also just do an estimate. So, if you do a SIPOC chart or if you do a process map, you have the main process steps, and the managers who are doing that work probably can give you a rough estimate. So how many hours are spent just on the work? Because again, if you reduce the number of hours spent on budgeting, you're creating capacity for these managers to do other value-added activities that maybe can contribute better to growing the business. You can look at the overall total time to complete the budgeting process. That's sort of that 3 months. And you want to reduce that. And then productivity would be the total value added time. So it's sort of those hours spent on budgeting divided by the total time, which would be those 3 months. You might want to convert that into hours. Ultimately, what you wanted to do to be more productive, you reduce the total time, and even if you keep the value added time the same, that's fine, but you could also reduce that. So these are some basic measures that you can use to set your targets. Okay, even if you just pick one, the total time, we want to go from 3 months to 1.5 months when we're budgeting for 2022. That's a good start. It's better than nothing. But you want to have these numbers, you want these performance measures to set the targets. You cannot improve what you cannot measure. All right, so those are sort of the basics for the plan. And the other piece of planning is, what do we want to try to do? So here's some sort of ideas that I've used in the past, both as a CFO and helping other companies improve budgeting. So first, we want to budget at the highest level of detail possible. Anything but line item by month by department is an improvement. Okay. What waste will this eliminate? First, it will improve quality, okay, because you have fewer assumptions to make. It will reduce or eliminate overproduction because you're budgeting at a level of detail based on what the users need. Waiting time, you will reduce it. There's fewer assumptions to think about. There's fewer details to gather. So there's less waiting time. This will get, managers will have more capacity because they're not spending as much time on budgeting. You have the opportunity to reduce transportation handoffs and reduce or eliminate excess processing. So, for example, can you budget by department for the year in total and not even by month? Maybe if you have to have some level of a monthly forecast, is that something that accounting and finance can do just for whoever needs it? And remember, if you're not using actual to budget as a measure of performance, this is possible. And, and I did this as a CFO. We just went to an annual budget number for every department, the total expenses for the department. And that ties into the second one. Second improvement is set clear targets or goals. Think about this as is a percentage increase in the budget over your current year projection. Most companies in the budgeting process, there's a general idea of what the financial goals are. But what you want to do is be realistic about this. Okay, you don't want to do this unrealistic goals. But and I think this causes a lot of the rework where maybe the senior leaders and finance have these goals in mind. They have the managers do their budgets, feed it into accounting, summarize all the information. Oh, we're not hitting our targets. So we go back to the managers and say, you need to make changes. So think about this. If you set the goals at the beginning and make it very clear to the managers, then they don't have as much work to do. So for example, let's say that on the cost side, that your financial projection that you would like to hold the overall increase in costs to like 5%. All right, so you could take the department budget, you could take for example, 2022 projection of expenses for the accounting department, and you can increase it by 5% for the 2023 budget, and you can give it to the CFO can look at that and say, yeah, that budget's fine. You're done budgeting. Okay, you've accepted the 5% increase. The details don't matter. So I also look at this as like budgeting by exception. Okay, if I need more than 5%, then we need to talk about it as to why I need 5%, more than 5%. So again, you're getting better information, fewer assumptions, less work, and you eliminate a lot of the time spent on budgeting. The third improvement approach is to minimize the number of rounds of budgeting. I would recommend 1 or 2. Okay, so what has to happen there? Well, first, you have to redefine the purpose of the budget based on what the users need. Okay, for example, you may have to prepare a budget for investors, or maybe if you have loans from the bank may want to see a budget. You know, a bank or an investor, they may not want to see line item by detail. They might just want to see just an annual plan, or maybe that annual plan broken down monthly. So again, if you redefine the purpose based on the user's needs, you have an opportunity to minimize the number of rounds. You know, deliver the minimal necessary information the first time into the budgeting process. And, you know, meet for exceptions and reduce handoffs. So again, you know, 3 approaches: high level of detail, set targets and goals, and 1 or 2 rounds of budgeting. Most people said they do it 3 times. Okay, try to do it 2 times. So what do we have to do to make sure it only happens twice? The fourth improvement is creating flow. So this is basically a pull system versus the traditional budget schedule. Now, this is a little bit more complex to put in, but it still can be done. We're just going to basically be using daily lean management practices. What benefits will you get? Reduce waiting time, reduce handoffs. You're looking at the budget process a little differently. You're doing it once a year, but you're going to create smaller batch sizes, okay, the work. You're not going to look at just the budgeting process as a whole. So how does this work? So first thing, what's a pull system? So you reduce the batch size. So you have to sort of break down this budgeting process into smaller batch sizes. You know, the components of the budget or time frames. You can do it by time or by the work that, you know, the output. So for example, a sales forecast can be broken down into some level of detail. And again, exactly what level of detail is needed to develop a sales forecast for an annual budget. Okay, same thing with an operational plan. So a small batch size, you want to create single piece flow and control the pull. And what I mean by that is, how does the work move through the process? So you have these batch sizes of work that have to be completed before moving on to the next batch. So, you know, you sort of take this sales process, sales forecast, and how operations uses it in manufacturing. So if you create a sales forecast and you give it in a current state, you create a sales forecast and you give it to operations, and they need it so they can do their operational budget. But maybe the sales forecast is not necessarily completed, or maybe it hasn't been approved, or maybe it's going to be tweaked. Well, now you've given operations something that they're working on, and now you're going to change the forecast, which means operations then has to change their plan. So complete something in total before moving it to the next step. And you want to pull the work visually by signaling the next downstream process that the work is that what they need, their input of information, is ready. You also need to level the work. You want to balance the capacity to get the work done when it arrives to keep flowing. Okay, I mean, in general, the people that do budgeting work, they know how long things take. But what you want to do is, for example, I'm going to use the sales forecast and the operational plan. As soon as the sales forecast is completed, it's given to operations. They have a signal. The information's ready. And immediately they have the capacity to begin working on it. So if you know when things are going to be completed, then operations can create the capacity to get the work done. So when the budgeting process hits a certain function in the business, they're ready to start working on it rather than it sits and they're busy doing other things. Now, daily lean management. Now I realize you may be saying, well, gosh, we have a 3-month budgeting process. Do we have to, look at this on a daily basis? The short answer is no. You can apply daily lean management practices on a weekly basis, but daily lean management is just the common term. And again, this is a PDCA cycle. So what's the plan for the week? What are the budget tasks that need to be completed? Execute the work, have signals. If things go wrong or if there are problems and issues, we need a signal. We need to have a standard response. Then you conduct weekly huddles. So you're going to review on-time delivery, other performance measures. You're going to understand root causes of problems and issues, and if necessary, adjust the schedule. So this is just sort of a weekly cycle. So you have all these tasks that some can go on concurrently, some can go on, must be done sequentially. And so how are we going to actively manage these to understand that we're hitting our weekly on-time delivery? We are hitting our cost in terms of the hours that we're spent working on it. Okay, so you can look at this, the budget process as a whole. You can also apply this in the different functions when they're doing their specific work. The real key to make daily lean management work is make the work visual board. So and a visual board should be laid out PDCA. What's the plan? What's the weekly schedule? What are the tasks? And we want to make sure that those tasks are balanced with our available capacity. Keep track of the status. So the work that gets done during the week, is it on target? Is it behind? Or do we have some problems and issues we have to deal with? Excuse me. Visually display the measures, the delivery, quality, flow time, cost. And then, what are the problems and issues? What are the status of any countermeasures? Create a visual board. Okay, obviously, if you're in a large company, this might have to be based, Excel-based board or something. So what we're doing here is we're looking at the flow, and we're trying to pull the work through the process rather than push everything out at one time. Then you do the daily huddle. So you have the visual board, you have your daily huddle. What's this week's plan? How did we do last week? Do we have any problems and issues we have to deal with? What are the countermeasures that we have to take? So you're actively managing budgeting. You could do it at a macro level and also at a micro level within functions. Okay, polling question number 3, I'm going to skip because I actually forgot what it was. So we'll move on to rolling forecasts. We got about 10 minutes left. So rolling forecasts, think about this. This is the goal. This is sort of like the long-term goal, is to eliminate the annual budgeting process and move to a rolling forecast. Now, I realize some companies budget and forecast, and forecasting to the wall, which, think about the wall as the year-end numbers that you have to meet. Okay, you set a budget, and then you do quarterly forecasts. And as I mentioned at the beginning of the webinar, the closer you get to year end, the harder it is to forecast to make the budget if you're behind in any way. You just can't catch up. I mean, I'm working with a company right now where they have a goal of profit before tax to be 10%. And, through August, they're not there. And so, I was talking with their controller about it, and he said, well, I don't think we're going to be able to make it this year because we just cannot sell. We couldn't increase sales that much to get to 10% by year end. Again, so, this forecasting is not to the wall, but rolling. Okay. So why is rolling forecast good? One, you're basically updating the assumptions more frequently. Annual budgeting, you make the assumptions once a year and you hold them. With a rolling forecast, you're basically updating these assumptions, which, just by looking at the most current information and updating the assumptions, you get a little bit better at it. A lot of companies have a monthly sales operations and planning process. Okay, so you can incorporate the rolling forecast into that. And over time, a rolling forecast provides more reliability than an annual budget. Now, how do you go from where you are annual budgeting to rolling forecasts? Well, it's a transformation process. First, you must, in order to do good rolling forecasts, you have to have a higher level of detail, okay, to minimize the assumptions. A forecast is not doing annual budgeting 4 times a year. Okay, so you got to speed this thing up. Okay, it has to be fast. You can't have people, you don't want to spend more time on rolling forecasts than annual budgeting. Now, you also, the rolling forecast and looking at these assumptions, for example, on a quarterly basis, it helps you identify gaps between the assumptions you made and what really happened. Okay, and you can make adjustments to the assumptions. You want the forecast to reflect where is the company truly headed. You don't want this forecast to be based on unrealistic assumptions. It's based on what we know economically. Where are we going? Okay. So this is just an example of what a monthly review would look like, where you first focus on the demand or the sales side, then you go into the operational plan. Once you get the demand side and the operational plan, and obviously there's some selling, general, administrative costs which have to be projected, then you can create the updated forecast and have executive review. Ideally, you can get this done rather quickly on a quarterly basis. So, rolling forecasts are more leaner than the annual budgeting process because you're pulling in the most recent data. You're operational numbers and your financial numbers are more integrated. You're flowing the work, and the users feel like they're getting more accurate, up-to-date information. So again, strive for rolling forecasts. Can you make the jump from annual budget to rolling forecast? Possibly. It really depends on how much waste is in your budgeting process. Okay, because again, people are just used to doing the budgeting process one way. And you say, well, we're going to do it 4 times a year. They're going to think, oh, well, we have a whole lot more work to do. Okay. So just to wrap up, complete the survey that you'll get at the end, or you'll get via email. If you have a CPE certificate you would like, continuing education certificate, please email me. So some practical advice, stop using actual to budget as a performance measurement. It drives a lot of the bad practices which go on in annual budgeting. Make improving annual budgeting strategic. Budgeting involves a whole lot of people. Okay, and executives and leaders of the company, they also are one of the primary users. So this, you're benefiting the organization. Okay, what's the benefit? You're freeing up time. A leaner budgeting process that takes less time creates more capacity to do other things. And finally, you have to plan the improvements before budgeting begins. And you're really looking at the annual budgeting process as a big Kaizen event, okay, where you're going to try new things out. That's the way to approach things. So just to give you a preview of some upcoming events, I said I'm doing a virtual Kaizen event on October 12th. You can see the times. There's 3 sessions. And really what the purpose of this is for me to work with the people that attend to give you, a true improvement plan, okay? We'll use a lot of, some of these ideas today, but if you feel like it would be worthwhile to get a team together and work with me, please consider registering for this event. Also, upcoming events, we have, we're getting towards the end of 2022. So these are the webinars for October, November, and December. And we have 3 more community chats on those dates. There's the registration information if you want. So I'm going to take a look at some questions, see if we have any. And we don't have any questions. If anybody has any questions, please type them in right now. All right. All right, so Eric asked a really good question about connecting annual budgeting to strategic policy deployment or HOSHIN. Yes, that is something that should be done. If you have strategy deployment or HOSHIN established in your business, then you must connect the budgeting process to that, because there's a lot of benefits to getting the assumptions from HOSHIN into the budgeting process. So we're at the top of the hour. Thanks for attending. Do you have any questions? Please feel free to email me, give me a call. Be glad to talk to you more about budgeting, and hope to see you online in the future. So everyone, have a good day.